can we say it's safe to go back into the markets given what we saw yesterday?
Well, I think it is. No guarantees, but I think it is. It seems to me that the spasm that we went through in both bond and stock markets over the last few days, really an adjustment to what the Fed was saying about being a long way from neutral. So I think we've absorbed that. We understand it now. The Fed has the market's attention, maybe where it didn't before. So maybe stocks were a little bit overdone, certainly on a relative strength basis, they were oversold, so it wasn't surprising you get a nice bounce back. But it is probably likely a bottoming process. But I do think that stocks have an opportunity maybe to edge higher through the end of the year from here.
What's the primary catalyst for the reason why?
Well, I would say it's going to have to be earnings. If you look at the Fed, I think the Fed is probably not a market concern until you get to next March. I mean, they're going to raise rates in December, we think. So they're kind of out of the picture, I think, as a real headwind, maybe. And at the same time, I don't see a lot of progress likely to be forthcoming vis-a-vis China. Certainly not until after the midterms, and maybe not for a long time after that. So it's going to have to be earnings, and it's going to have to be good, strong economic data.
All right, David, the Russell 2000 small cap index kind of moved out of that correction/phase that we were talking about, down 10% or more from its highs. Is it small caps? Is it mid caps? Is it large caps? Where are investors going to find the best opportunities for gains in the coming weeks and months?
Well, I would say in the coming weeks, it's probably still likely to be large caps. I think that's probably where you're going to see the best earnings growth. But maybe longer term, from a valuation point of view, smaller and mid-cap stocks are certainly extremely attractive. So I think you want to have some exposure there. But I do think that market leadership is likely to be still in the large cap names. As I said earlier, it's going to have to depend on just the overall strength of earnings. 20% is not likely going to get that done, by the way. I think it has to exceed that. That's probably already reflected in prices. We need to see something around 23, 24% in the third quarter.